Hey everyone. Today we're doing a complete deep dive on Astera Labs, ticker symbol ALAB, fresh off their absolute monster earnings report that crushed expectations across the board. This AI hardware company just delivered what might be the most impressive earnings beat I've seen all year. And I'm going to break down exactly why this stock deserves serious attention. Astera Labs isn't just another AI play. They're building the critical infrastructure that makes modern AI possible. While everyone's focused on the flashy software companies, ALAB is quietly becoming the picks and shovels play of the AI revolution. Today, I'm sharing my complete analysis, the numbers that shocked Wall Street, and my specific buy, sell, or hold recommendation with exact price targets. What is Astera Labs? Let me start with what Astera Labs does, because this isn't your typical AI company. ALAB designs and manufactures connectivity solutions for AI and high-performance computing. Think of them as the company that builds the nervous system that connects AI chips to make them work together efficiently. They have four main product lines. First is Aries, their retimers that extend high-speed signals. Second is Taurus, their smart cable modules. Third is Scorpio, their fabric switches that we'll talk a lot about today. And fourth is Leo, their CXL controllers that manage memory. The company went public in March 2024 at $16 per share, and it's been an absolute rocket ship since then. They're headquartered in Santa Clara, California, with about 300 employees, making this one of the most efficient revenue-generating machines I've ever analyzed. What makes ALAB special is its position in the AI infrastructure stack. Every major AI data center needs its products to function properly. When NVIDIA builds an AI supercomputer, when Microsoft scales up ChatGPT, when Google expands Bard, they all need Astera's connectivity solutions. Earnings breakdown: the numbers that shocked Wall Street. Let's dive into the Q2 earnings that just dropped, because these numbers are insane. Revenue guidance was $170 million to $175 million. They landed at $192 million. That's a 10% beat on the top end of guidance. But here's what's really impressive. That $192 million represents 20% quarter-over-quarter growth and 150% year-over-year growth. And get this, that's an acceleration from their previous quarter's growth rates. GAAP earnings per share were guided from 10 cents to 11 cents. They delivered 29 cents, nearly triple the high end of guidance. Adjusted EPS was guided from 32 cents to 33 cents, and they hit 44 cents. Looking at their profitability metrics, gross margin came in at 76%, up from 75% last quarter. That's exceptional for a hardware company. Operating margin hit 27%, generating $39.8 million in operating income. The cash flow numbers are equally impressive. Operating cash flow hit $135.4 million, and their cash balance grew to $1.07 billion, up from $925 million last quarter. This company is a cash-generating machine. But here's the number that caught my attention. Net income progression over the last 5 quarters tells the whole story. They went from negative $7.5 million to negative $7.6 million, then positive $24.7 million, $31.8 million, and now $51.2 million. That's a $20 million sequential jump in net income. The Scorpio revolution and future catalysts. Now let's talk about Scorpio, because this product line is crucial to understanding ALAB's future. Scorpio fabric switches exceeded 10% of revenue in Q2. This is significant because management originally projected Scorpio would reach 10% of revenue sometime in 2025. But they hit that milestone 2 quarters early. What this tells us is that Scorpio adoption is accelerating faster than anyone expected. And here's the kicker. They mentioned Scorpio X series engagement is happening with over 10 unique AI platform companies. When analysts asked if that's one product at 10 companies or multiple products, management was clear. It's multiple different products at 10 separate companies. The company introduced a new term in this earnings call called AI Infrastructure 2.0. This represents the next generation of AI data center design, and ALAB is positioning itself at the center of it. They're not just participating in the AI boom, they're helping define what the next phase looks like. Looking forward, management provided some incredible guidance. Q3 revenue is guided from $203 million to $210 million, representing another sequential increase. But more importantly, they laid out a multi-year roadmap. Scorpio shifts to high-volume production in 2026, and UA-Link proliferation in 2027 will be a major growth vector. Here's a direct quote from management that I love. "We have the engagements, we have the design wins. Now it's a matter of all these platforms getting qualified and ramping to production." Competitive analysis and market position. Let's talk about ALAB's competitive moat, because in the hardware world, sustainable advantages are everything. First, they have deep partnerships with NVIDIA through their NVL-Inc Fusion collaboration. When NVIDIA designs new AI systems, Astera is involved from day one. Second, they're a promoter member of the UA-Link Consortium, which is developing the next-generation interconnect standards for AI. This isn't just about selling products. They're helping write the rules for how future AI systems will communicate. Third, their product portfolio is becoming increasingly diversified. They now have 3 product lines generating over 10% of revenue each: Aries, Taurus, and Scorpio. This reduces customer concentration risk and provides multiple growth vectors. The competitive landscape includes companies like Broadcom and Marvell, but ALAB has carved out a specialized niche in AI connectivity. Their products aren't commodity hardware, they're highly engineered solutions that require deep technical expertise and close customer relationships. What impresses me is their R&D efficiency. They spent $48.9 million on R&D in Q2, but generated $192 million in revenue. Compare that to sales and marketing at only $9.4 million. This product sells itself because industry insiders know they need Astera's solutions. Financial health and valuation analysis. Let's examine ALAB's financial health because the numbers here are remarkable. The company has over $1 billion in cash with essentially no debt. That's an incredible war chest for a company of their size. Looking at efficiency metrics, they generated $135 million in operating cash flow on $192 million in revenue. That's a 70% conversion rate, which is exceptional. Their balance sheet is fortress strong with no significant liabilities. From a valuation perspective, ALAB trades at about 15 times trailing revenue, which might seem expensive until you consider the growth rates. With 150% year-over-year revenue growth and accelerating profitability, that multiple starts to look reasonable. The forward price-to-earnings ratio is approximately 35 based on analyst estimates, but those estimates are probably too conservative given the consistent earnings beats. More importantly, the company is in the early stages of a multi-year growth cycle. One thing I like is their capital allocation strategy. They're not doing any expensive acquisitions or wasteful spending. They're reinvesting in R&D and building cash for future opportunities. Management mentioned a new tax rate of 13% going into 2026, which will boost after-tax profits significantly. Risks and challenges. Now let's address the risks because no investment is without challenges. First, semiconductor cyclicality is always a concern. If AI spending slows down, ALAB would feel the impact quickly. Second, customer concentration could be an issue. While they're diversifying, a significant portion of revenue still comes from a handful of large customers. Any design losses could hurt near-term results. Third, the competitive landscape is intense. Broadcom, Marvell, and other large players have significant resources and could develop competing solutions. Fourth, execution risk on new products like Scorpio X-Series and Leo CXL controllers. Hardware development has long lead times, and any delays could impact growth. Finally, valuation risk. At current levels, the stock is pricing in continued perfect execution. Any disappointment could lead to significant volatility. Warren's recommendation: strong buy with price targets. Here's my bottom line on Astera Labs. This is a strong buy with a 12-month price target of $220 per share. representing approximately 20% upside from current levels around $180. Why I'm bullish. Dominant position in critical AI infrastructure. Accelerating revenue growth with expanding margins. Multiple product cycles driving long-term growth. Fortress balance sheet with over $1 billion in cash. Management is executing flawlessly on guidance. Position sizing. This can be a 5 to 8% core holding for growth investors. The combination of growth and balance sheet strength makes it suitable for larger allocations. Entry strategy. Current levels around $180 represent a good entry point. I'd add on any weakness below $165. Stop loss. I'd set a stop loss at $140, representing about 20% downside protection. The AI infrastructure build-out is just getting started, and ALAB is perfectly positioned to benefit from this multi-year trend. Conclusion and call to action. Astera Labs represents everything I look for in a growth stock. Exceptional fundamentals, massive addressable market, strong competitive position, and management that consistently beats expectations. This isn't a speculative AI play. It's a profitable cash-generating business with clear visibility into future growth. While the valuation isn't cheap, the quality and growth trajectory justify the premium. What do you think about Astera Labs? Are you as excited about AI infrastructure plays as I am? Drop your thoughts in the comments below. If this deep dive was helpful, smash that like button. And subscribe for more individual stock analysis. I'll see you in the next one.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.